5 stocks to buy, July 2023. Welcome back to another Stock Dads video. My name is Chris, VP of Marketing at Stock Dads and one of our exclusive analysts in our Discord group. I personally focus more on swing trades and long-term investments. So if you're looking for something for your portfolio, check out this video in full because we're gonna go over some great stocks. Before I go into all the different reasons why I think these stocks are rated as a buy, I do want to point out that some of these stocks I have been investing in for a long time now, and I do have positions in all of these different stocks. Make sure you do your own research before you decide to invest. Without further ado, the first stock on this list is going to be MP Materials. This is a $24 stock as of this recording, a $4 billion company, and this is a mining company in rare earth materials. These rare earth materials are used commonly in batteries that go into electric vehicles, powering the electrification of our whole society, and these go into many other different electronic related products as well. As we know, China has banned the export, or at least placed a lot of restrictions on the exports of rare earth materials. Gallium, a lot of other metals that you can't pronounce, but those are actually very necessary materials for a lot of our different products, and most of this stuff we do get from China. In the case of rare earth materials, specifically NdPr, which is what MP Materials focuses on, that is primarily controlled by the Chinese. About 85% of the market share globally is in China, maybe a little bit in Australia as well, but MP Materials is pretty much the only North American producer of rare earth elements at scale, commanding about a 15% market share. So as tensions rise between US and China, and the Chinese don't want us to have anything, the US don't want China to have everything, it's just an ugly situation. And with all the supply chain issues over the past couple of years, we want to make sure that domestically we have a good supply, not just of these rare earth elements in and of themselves in the most basic form that they're getting out of the ground, but also once you refine it, once you also start to construct magnets and put those in there. MP Materials is trying to develop different factories and facilities to build out all of those magnets as well. And they've already secured contracts with big automotive companies like General Motors, which will be creating revenue and net income very soon, in about 1.5 years in 2025. So as they continue to scale the business model, and as demand for rare earth looks to be growing more and more and more, as more electric vehicles command more of a market share of cars sold in the US and globally, everyone's gonna start buying Teslas and Ford F1 Lightning, F-150 Lightning, and all those other electric vehicles, whether it's cars or trucks or whatever. MP Materials should stand to benefit. As demand is going to be strong and increase, prices are going to be strong and increase as well. And that's immediately positive to the bottom line of any mining company. I do believe that in the long term, these trends will speak for themselves and MP will rise once again. So that's personally why I rate this stock as a strong buy. Stock number 2 is called Oddity stock, ticker symbol ODD, odd. Very odd company when you first look into this, because at first glance, it does look like any other beauty and cosmetics company, which is not bad in itself, right? Because a lot of cosmetics companies, well, there's one big one in particular that has been skyrocketing over the past year, and that is e.l.f., right? e.l.f. Beauty has gone pretty much 10x, and there's a huge demand right now for affordable cosmetics, but also just different cosmetics, and this is where Oddity Tech comes in. They use artificial intelligence to power all of their products and the offerings or the custom recommendations that they give to clients. They've collected over 1 billion data points, and they have over 40 million customers. As they drive that direct-to-consumer funnel, they also are using that data to develop new products. They acquired a different company to start developing biotech solutions, meaning better molecules and better ingredients that are just functionally better for wellness. AI stocks have obviously been crushing it, and this one is actually not like a lot of other AI stocks because it's generating amazing growth for sure. 60% revenue growth so far this year. They've been growing at 100% year after year consistently. But also, a very important factor is that they already have been generating positive net income for the past couple of years, 10 million to 20 million to 30 million. No debt on its balance sheet, no debt outstanding, but they had 100 million at the time of that filing, and they just raised through an IPO over $400 million. So that's a solid balance sheet, amazing growth in a resilient category, but they are innovating in that category. I like that. So that's why I am rating this stock a buy, and I have just bought some shares. Yes, it's a new IPO stock. There's always a risk with IPO stocks. A lot of things can happen, but ultimately over the long run, it does look like this is a very promising business model. By the way, this video is sponsored by our very own StockDads Discord group. This is where we have our premium services, which include our trading and investment alerts for stocks, options, and crypto. We also have daily live streams. We have video courses. We have a mentorship program. This will help you become a better trader and investor. Be sure to check it out. There's a ton of value up there. Be sure to check it out because prices are going up very soon. So lock in that cheaper rate. So stock number 3 is going to be Verizon, VZ stock. This is an old school stock. We're talking about a Dow Jones component stock. It has an 8% dividend right now approximately, and a lot of people have been selling off Verizon. A lot of controversy recently. We'll get into that right now. So Verizon stock is down almost 50% from its all-time high. Over the past couple of years, there's been obviously more and more competition in the space. T-Mobile has grown massively. You have other smaller players like Mint Mobile. With all that hype that went into 5G, it hasn't really panned out that well for Verizon in terms of consistent growth. The reason why it's sold off even more recently is because there have been Wall Street Journal reports that there's lead contamination because of the cables that these telecom companies have shoved into the ground. Apparently, lead is escaping from those cables, getting into possibly soil or water supply, and if you drink that, you're probably dying or something. So that's not good. But it seems like those reports have a lot of fear in it, not a lot of facts yet. Some people estimate that maybe about 10% of these cables are no good and causing some form of environmental and health damage to people. Some people say it's less than that. Some people say most of this problem is actually with AT&T rather than Verizon. The stock has already been beaten down like crazy, and worst comes to worst, Verizon or AT&T will have to pay up a couple $1 billion to remediations. But this is a company that's doing over $2 billion in free cash flow every quarter. They do have a lot of debt, these companies, but again, with that amount of free cash flow and net income, I think that they could weather the storm here, and the valuation already is so low. This company is trading at approximately a 6-7 PE ratio. If you look at the 5-year historical average, the PE ratio is actually 11. If you look at a different valuation metric, total enterprise value over revenue, which factors in things like debt, it's at a 2.3 versus the 5-year average, once again, is 2.8. With those valuation metrics coupled with their profitability, I don't see them cutting that dividend anytime soon, so I think that's safe. And then the share price just simply looks undervalued to me. So this is a great dividend play, in my opinion, that I'm buying right now, and maybe you can consider doing your research on that as well. All right, stock number 4 here is Dow stock, Delta Airlines. Now, I could say the same thing about Southwest Airlines, United, I think is doing well. All the airlines, if you look back over the past couple of years in 2020, many people weren't even sure if airlines were going to survive. They had a bailout from the government. They had billions of dollars in debt that they're going to have to pay back. So putting that aside, the share prices here are just so low. And if you asked, can I invest in any companies that's still at that 2020 bottom? Airlines are still pretty near that level. And even though some of those balance sheets are kind of messed up, Delta Airlines, for example, is growing at huge rates right now because travel demand has kicked up, and that's reflected in airlines raising their full year profit forecasts as well. So it's getting rosier and rosier in my opinion, even with inflation, and the prices of these plane tickets have gone up a lot. Consumers are still willing to pay that. So we have record revenue, we have very strong net income. Delta has a PE ratio of 10, which is very low considering historical averages and also versus the overall stock market as well. Plus, they do have a 0.8% dividend yield. Obviously, if companies continue to grow their net income and be cash flow positive and paying off that debt, they're going to also be able to raise those dividends over time. And just an aside, this is totally anecdotal and not really useful really, but I've liked my experience flying on Delta, have done so multiple times. They're, great on safety, got free Wi-Fi, although sometimes that doesn't always work. But, overall, I think that Delta is definitely one of the better airlines to fly on. All right, and we saved the best for last here. Stock number 5 is going to be Perry stock. If you watch any Stock Dads video, you probably know that this was coming. Perry is a $1.7 billion ad technology company. There are a lot of companies that are trying to sell ads. There are a lot of companies that are trying to buy ads. Perry is pretty much the gateway to buy and sell sides here. Perry works with Microsoft Bing on their search advertising. And then they also have another segment of their business, which is connected TV, involving videos, placing ads with QR codes where you can scan them and immediately check out different products. So just superior ad technology overall. They also have a cookieless solution, which is privacy focused, which involves, cookies are going to be banned in the near future. Companies are going to have to find a way to target consumers in an effective manner. And Perry has that unique technology that has been gaining traction with many clients. Besides Microsoft, Perry also has clients including Mercedes-Benz, including Walmart, including Beyond Meat. So many big name companies are working with Perion's financials are very, very solid over the past couple of years since 2020. The compound annual growth rate for its revenue has been over 30%, and adjusted EBITDA growth rate has been over 80%, meaning that their revenue is obviously growing very strongly, but their profitability has improved at a much faster rate. And with the investment into artificial intelligence by Microsoft, there is a lot of potential for Perion to catch fire here and get more searches through Microsoft Bing, monetize that, and get a share of that profit. They're beating expectations every quarter this year. Most recently, they pre-announced Q2 earnings, and we know that they're going to beat the numbers, and they're going to increase that forecast for the rest of the year. We'll see what happens when they report in August. But what I'm saying is, if we get to the other side of this potential recession and the economy starts to improve, this company is going to do even better, because now people are going to throw even more money at advertising. They have also $430 million of cash and no debt on the balance sheet whatsoever. So they have a lot of money that they could potentially invest, acquire companies during this downturn for the industry, and emerge even stronger. So there you guys have it, folks. Those are 5 stocks to buy right now as of July 2023. I view all of these as a potential swing trade and long-term investment. So if that fits the profile of a company that you're looking to invest in, do your own research, think about what I've said here, and decide what you want to do with it. As I mentioned earlier, be sure to check out the Stock Dads Discord in the description. I hope to see you guys in there. I'm posting and being active every single day, as well as my team. We'd love to help you become a better trader and investor. Until next time, my friends, good luck trading and investing.